All right. Well, thank you very much for attending today's webinar. I'm assuming by this point you probably had a good chance to look at the risk warning on the screen. Let's move forward. So we're in October now, so we're in the last quarter of the year. So that in itself can sometimes bring some changes to markets. It was actually just heading into the end of the quarter at the end of Q2 when we started to see a bit of a sell-off in the markets. And I saw a statistic last week that someone published that year to date we've seen the smallest maximum drawdown in the S&P 500 ever. So the biggest peak to trough pullback, if you like, within the market, that's the smallest it's ever been this year. So we're at pretty unprecedented levels of low volatility. So if the S&P 500, as an example, were to get back within its kind of normal statistical levels, there needs to be some sort of pullback in the markets in this third quarter, a larger one than we've seen so far this year. October is obviously famous for its big crashes, so let's see what happens. As far as specifically what's on the agenda this week, we've got non-farm payrolls, pretty low expectations, under 100,000, that's versus 156,000 last month. We've got the start of US earnings season. Trump's infrastructure speech was planned for today. That might be delayed now, given the tragedy over in Las Vegas. Data-wise, manufacturing service PMIs feature a fair bit. Goes some way to explain why the FTSE is higher today, because we had some decent PMIs out of China. Obviously, what happened in Catalonia, some pretty graphic images and video footage coming out over the weekend. Not a great look for the Spanish state, and obviously very sad for those people that got caught up in that. Not a great example of democracy. I've talked about this a little bit in my report today, but just sort of saying that I think had even the result just gone ahead as expected, even if it was a strong yes vote for the referendum, it wasn't legally binding, so there wasn't really any necessarily fallout from it. So probably markets could have just bounced back, but now it's a bit more of an ongoing issue, and something that Rajoy in Spain is going to have to deal with and make customers' job at the end of it. Obviously, I mentioned that mass shooting in Las Vegas. I don't think it affects markets, but you never know. Every little small thing can affect sentiment. And then some big levels to talk about. Euro dollar pulling back to 117, sterling pulling back to 133. Brent crude has already almost hit $60 and now has fallen back a fair bit from it. WTI now coming back close to 50, in fact. And the FTSE 100 crossed that 7,300 barrier and it pretty sharply jumped up to 7,400. So moving on to the charts. So got the weekly chart for the Euro US dollar candlestick chart here. Just want to kind of start with the weekly to give us a little sense as to where we're coming from in these last couple of weeks. Because obviously the euro has been dropping pretty sharply since it hit that 121 mark. It's been heading to the downside. But what is the context here? To me, we're above the 50 RSI on the weekly chart. We're above the previous swing low on the weekly chart, and we're above both the 20 and the 50-day moving average. So still a rising market from my perspective, and I'm expecting the market to find some sort of swing low for the medium term and to bounce back. That's just the interpretation based on the trend. But am I ready yet? Not quite, because the alignment on the daily chart here is looking still pretty bearish. We're making lower lows, lower highs, not really signs of a base yet, not really signs of putting in a low yet. Potentially that happens down at the 117 mark that I mentioned, or down into that previous low, which I had marked on the chart as a weekly swing low that you can see here there's kind of a horizontal resistance on the daily chart. So maybe that prevents it. We're getting down into pretty heavily oversold territory on the daily chart, but we bounced up from 30. We didn't actually quite hit the 30 level yet, so there could be more to go, and certainly far from being back above the 50 level, where it'd be like comfortable to think that we're back into an uptrend within the daily time frame. So, for me, it looks like the market's pulling back into a sweet spot for buying, but it's just we haven't really had. It doesn't look like this down trend is on the daily chart is ending just yet. Similar story from sterling, except the sterling looks, I would say, arguably a little bit stronger. It's pulled back from this 50% pullback, these previous peaks from 2016. But again, the weekly chart is in a bullish alignment. We're pulling back to the previous swing high at the moment, around the 133 mark that I'd mentioned. So this is a potential area the market bounces back from. You see the moves higher were quite dramatic. The last 3 weeks where we've dropped down, not been so convincing really. And you can see we're pulling back to support on the RSI level here as well, in around that sort of 58 mark. To me, where we currently sit, a potential turnaround point, but really, as long as we're above 128, call it, to me it still looks like a rising market. Now, were we to get down to 128, it'd obviously look a lot softer at that point, but still, now we're expecting the market to turn around and resume a daily uptrend. So we've taken out last week's low, so we are making officially lower lows at this point. So we're heading down into that previous 133. On the shorter term, we had this previous peak around 132.50, you could say. So in this area, potentially, if this gives up, then I would imagine that we're probably heading down towards the 50-day moving average, and these lows down here could offer the next potential area of support, given that that was where there was a low on the 11th of September. Again, we are heading down below the 50 on the RSI on the daily basis, so the 50, you can see how the price is dropping down below the 50 RSI at this, just shortly after it's fallen through the 20-day moving average and taken out that previous low there. So you can see the what was just a pullback turning into something a little bit larger, a bit of a reversal of the daily trend taking place. So to my mind, my style of trading, not obviously if you want to buy on a down tick, the market's doing the right thing for you at the moment. If you're looking for some confirmation that it's about to pull back higher, if you're looking for a resumption of the daily trend, it's not quite happening just yet. But 132.50 to 133 it potentially could. Next area of support, I'd potentially say at 131.50, because by the time it gets down there, it's probably going to match up with the 50-day moving average quite well as well. Euro sterling. So this is again the weekly chart, and we had a large drop a few weeks ago, but we've really calmed down in the last 2 weeks, and this week potentially trying to put in a base here. You can see it's that 50% retracement level of the rally since April, and then if I go down to the daily chart, you can see that we've pulled back. We have dropped through that 50 level, but this was the previous weekly low, which we came up and down and tested pretty much on the nose, and that came just after a breakdown of a little rising trend line there. So we broke down, hit that longer term support, and have broken back above this little trend line, rising trend line, which could have denoted a bigger break lower, but it just didn't because of the larger longer term support. So it looks like we could be in for a bit of a bounce here, and that would make sense, but the alignment of the market still at the moment, to my mind on this daily chart, is still to the downside. So chance of a bigger pop, but I think still while we're below this 50 area, while the moving averages are sloping down like they are, I think there's only so far any bounce in the market can go. So probably you're still, path of least resistance, there's still overall to the downside, but we're just maybe, because of this longer term support, looking at a little pop in the interim. If we were looking for an area to watch out for once that bounce has taken place, probably just the round number, the 90 level, you can see has been a pivot in the past, and it's just a round number that will concentrate mind should we get a move back up there. Dollar yen, again, on a weekly basis, very much in a range. So 108 is called the low, you could say 3 times. 114 called the high, a couple of times at least. So once we get back up to that 114 level, that's when we're maybe looking for the range to hold again. It can't hold forever, but even if it's a little false break like we saw at the lows at 108 here, you've got to watch out for it rolling over again. There's no trend here basically at the moment, so until we see a concrete weekly close above 114, I don't have any real confidence in this up move maintaining itself. On a daily basis, the trend certainly is still higher, but we can see that we've had a tweezer top pattern put in at the tail end of last week. If I just clear off the viewing options, if I just remove the period separators here, yeah, we can see that we're probing back into that tweezer top. So if we get a break above what is a bearish pattern basically here, then that would actually be a bullish sign and suggest to me that we can at least get another 80 pips or so up to that 114 mark. Switching gears to equities. So we had our eye on that 17300 mark obviously, but the market chopped and changed around there, tried to break lower, but it just didn't happen, and we had this bullish engulfing candlestick here. Well, a day that engulfed the previous day, wasn't at the end of a trend, but nonetheless followed an attempt to break lower there, closed higher, another attempt to break lower here, closed higher. So bullish signs within the market, and once we had that last one, there was no turning back. Over the next few days we went and tested that 7300 again, the final time, closed right up at the highs, and we pushed solidly higher the last 2 days. So it does look as though probably the main pivot to watch out for again is the 7450 mark, where 7300 was the significant part of the range on the downside. 7450 could call it on the top side. Obviously above there we start looking at these previous highs around the 7550 mark. FTSE I would still describe it in a range, but I think it's quite a good sign that we really basically held 7200. I thought we could get down to the 7100 mark, but again, even as I was saying that on a previous webinar, I was very much hedging myself, saying you can't underestimate these equity markets. It's still overall a bull market in stocks. So if you are looking for short positions, you've got an overall bull market working against you, and this has been a prime example right here. DAX looking very strong at the moment, looking like we're pretty good for a record high this week. We're just probing that 12,900. Looks like pretty good odds we can get above 13,000 this week, judging by this strong weekly trend. We had that swing low point there. We tried to dip below it. We couldn't do it. We've got the bullish engulfing week, and then we haven't looked back since. We've been trending higher each week. So risk of a double top, obviously, around 13,000 marks. So we do have to watch out for any big bearish reversal patterns up here, but the trend's still very much our friend, I think, moving higher at the moment. If we drop down to the daily chart, you can see finished last week very strongly, breaking above what had been a bit of resistance from this previous peak back in July. You can see we're consolidating there, but we've got the big breakout, and the last 2 days have been very solid. You can imagine it might get a little bit more touchy around as we get into that 12,900 mark. But then with the trend this strong, if it is going to break above here in one go, you're not going to get too big a pullbacks. But given it's been such a sharp move, there's a good chance we get, if we'd been steadily moving higher, I'd feel better that we're going to get the breakout. But this sudden sharp move, the market could be looking a bit exhausted. Just look at the RSI down here on the daily basis. Pretty overbought at plus 75 at one point. So I wouldn't be surprised to see us dip back below 70 on the RSI to get out of that overbought condition before we then make another run at breaking through 12,900. So Wall Street looking at new record highs as we speak. The big level ahead of us is the 22,500. It's looking like a reasonable bet that we can take out that. We'll have to see what the reaction is within US markets to the expectation about Donald Trump's speech on infrastructure, to the shooting in Las Vegas, and to the other global factors at hand. Catalonia referendum you could count as one, but that's been largely discounted in Europe. But technically, we're in a solid uptrend at this point. An example of the strength of the trend is we had the previous record high here from August, and we broke above it, came back for a retest, but didn't even get to it. We were sort of 20 odd points shy of the 50 odd points even shy of that previous peak, and then rallied on again up to new highs. So it's looking fairly solid on a daily basis, and even more so on a weekly basis. It's very much a bull market, so you're very early days if you're calling the top just yet, even if it is October. So Brent crude, let me get out to the weekly chart here. So a big bearish reversing looking pattern here on the weekly chart as we ran in to the previous peak from the start of the year, from January. So the market not looking that confident at a breakout at the moment. I still think that probably we can hold the 55 mark, and if we can, I think we can push back into this pin bar pattern here. But when you see a strong multi-month resistance and then you see a push into the resistance and a close near the lows, it's a sign of sellers coming into the market. It's a sign of weakness, and I think that's why we're getting the follow through today. Quite a big drop in Brent here, and we're 55 really is the next line in the sand. That's the old peak. If I drop down to the daily chart, you can see a bit better. That's that peak here from May that we took a little while to get through. We couldn't do it on first attempt. We came all the way down to the lows. Finally did it recently, but we may need to come back right down to it again, to that 55 mark or thereabouts. So watch 55, but we are approaching the 20-day moving average. It's kind of the area where we broke out. You could say that we are putting a couple of highs on the 13th through the 15th through the 18th even. Then we've got that little breakout and the big move higher. We're right back to that now. So somewhere within this former trading range could end up finding support, because again, I think this is a rising market, but we've hit just a big multi-month resistance, so it's understandable that we're getting a pullback from there. Looking at RSI, we're still above that 50 mark, so you can still feel good about buying into a rising market from an RSI perspective. If we do get through, then obviously 60 is the big round number to consider. But to my mind, since we've broken through this declining trend line that I've mentioned before, potentially the upside's quite decent here. And if we can clear the old highs here and we can clear 60, then we're really opening the door to pushing up to 66, 67, 68, the highs that we were basically seeing back in 2015. So quite a pivotal moment here for all markets. Looking pretty soft at the moment, but we're really basically it's this long-term trend line break versus this resistance at the moment, and currently that resistance is winning. Gold also looking pretty soft. I mean, why are commodities all falling in unison? Well, it's strength in the dollar really is probably the main contributing factor. And so while the dollar's on this bullish run, it's going to be difficult for commodities to push higher. So we've jumped back through the 1300 mark, which is what we broke through before. But I did say when we did that, it has been a very choppy rising market. So not that unbelievable to have seen us drop through the 1300 mark. That didn't quite hold a support. That's not the nature of gold for these levels to hold that perfectly. You get big swings in the gold market essentially. What we could be looking at next as a potential area of support is the 50% pullback. So we dropped through the 50 of this shorter term move, So then we have to look out to the bigger move here, where you find the 50% pullback pretty much in line with the 50-week moving average around the 12.45 mark. Obviously that's a big dip from here, but you can see that the alignment in the market is pretty much to the downside here. We've taken out last week's low, we're making lower highs, lower lows. You know, it's a falling market on the daily trend, and the moving averages are rolling over to reflect that weakness in the price. So it's not looking like a fantastic time to buy, not looking like any real serious chance of reversing since we broke through that 1300 mark. So overall, we're okay well above this 1208 low down here, just based on the kind of previous weekly swing. You could use that. You could arguably use this as a maybe more conservative measure of where the uptrend needs to hold. So that's more like the 1250 mark. If we use this crosshairs here, you see it's around 1250 and change, where we saw that previous low. Above there, you know, maybe look for some deep value to come back into the market. We obviously have NFP at the end of the week. Gold's always a big move on NFP. Maybe it sends us down to the lows, or you know, if we beat those pretty measly expectations, or maybe it's the turnaround point where people start to lose faith in the US economy and the Fed's ability to raise rates more. So unless there are any specific questions, I'm going to call it a day at that point. Thank you very much for attending, everyone. It's Jasper signing out.